The lending market has been growing since the Great Recession. There's a fair amount of money out there. A lot of people really like HUD lending. I'm sitting here with Michael Vaughn. He is the Senior Vice President and Head of the FHA Healthcare Group at Walker Dunlop. Michael, you've been back in the private sector now for almost 2 years, a year and a half. What's changed the most in the private sector since your years at HUD?
Well, it's a different discipline in the private sector from HUD. At HUD, my customers were the lenders. Now at Walker Dunlop, my customers are the owners and people who are borrowing. In the private sector, when I was at HUD, we put together the lien program. There was a big flurry of activity to begin with. We had a very long queue. We managed to get enough help to get that down. It's been a little more normal since then, but it's always changing. There's more bank money in the market now than there was a couple of the years I was at HUD. HUD was almost the only thing for a while. So it changes, but the important thing is getting the borrower what they need.
Mm-hmm. You, at your time at HUD, you were very instrumental in developing the HUD lien program. What was the hardest part of that process?
The hardest part was getting the resources we needed, but the best part, I'll tell you the best parts, and that's more fun. The best part is there's so much talent in HUD, and that people, and I think this is true across industry everywhere, that if you give them meaningful work to do, a lot of responsibility, and make them feel wanted and appreciated, people can perform at 150%, and that's what we found with the lien program. The other thing is we had a lot of luck when we were putting it together. A lot of the people that could have thrown obstacles in the way were kind of looking in the other direction. Mm-hmm. So we were able to put together a concept. We had contract money available to us that just happened to be there. Just lots of luck. Hmm. So, and you know what they say about being lucky.
Better lucky than not.
Yeah.
So let's talk about Walker & Dunlop and what you've been doing since leaving HUD. When you joined them, did you have a certain mandate?
Well, it was to continue the expansion of the healthcare practice, and especially Walker & Dunlop is one of the preeminent firms in apartment house financing. We're the largest Fannie Mae lender, and have done our share of healthcare financing both in the HUD and Fannie Freddie platform. So it was to put all of that together, and one of the needs, of course, for HUD healthcare financing is for bridge financing, which we've been able to put together as well. So it was to enhance what was there.
You've been doing the bridge to HUD.
Yes.
So
yes.
WD is doing that funding itself.
Yes.
That's good. Yeah.
And there's always more you can do, and there's different prices of financing, but we're expanding our abilities in that area. And Walker & Dunlop is expanding generally. We've started a CMBS platform with one of our investor companies, Fortress. So there's a lot going on there, and it's all in the means of serving the borrower.
Mm-hmm. How much has your HUD business been growing?
The HUD business has been went from about $400 million 5 years ago to it's been a little above and a little below $1.2 billion for the last 3 years.
Mm-hmm. Is that everything, or
that's everything? The seniors in healthcare is approximately it's ranged between 25% of it and 33% of it. So it's a good chunk.
And growing the senior side?
Well, we had one very large portfolio in the 2011-2012 range, so that was kind of a pig in a python. But we're keeping it ramping up.
Are you focusing more on refinancing existing HUD debt, acquisition financing, construction? There's been a lot of construction going on now, new construction. Where are you seeing the business?
It's really mostly, and most of HUD's business on the healthcare side, the 232 program, it was over half A7s, which is financing of existing HUD loans over the last 2 years because rates were so low. That's tailed off markedly. It's now more just straight purchase refinance, the 223F program. That's where we've been mostly active, or I've been mostly active since we got there. And of course, HUD's new construction is attractive. they've tightened up a little bit in terms of having really qualified borrowers with some equity in the transactions, but it's still they're there. They never went out of the market. They never redlined any of the states. They've done deals in Arizona and Florida, which of course are coming back now.
Right,
so
right.
so it continues to be a good program, but the volume is always going to be on the refinance, purchase, new HUD loans, and we'll of course look to refinance existing HUD loans, but there was so much of that done in the last 2 years when rates were super low that it kind of stole from the market going forward.
When you look at the market when you started at HUD, and then fast forward to today, are you dealing with a much more sophisticated, not only sophisticated borrower, but a sophisticated originator? I mean,
well, the
what's
lenders
changed?
have
Yeah, the lenders.
definitely gotten more sophisticated. Well, it's again back to the lien program. If you set out a coherent set of rules for everybody, and the rules are the same, I mean, again, talk about having luck. We had a national platform with one loan committee, one set of rules, and what had happened with HUD, and it will happen in any big institution. It happens in the government, anywhere. Your Los Angeles office gets a little different from your Boston office, and they do things one way here and one way there, whereas when we had the national platform, the lenders knew what the rules were and how the interpretations were going to be, so it helps them. And then you could see it really, there was a steep learning curve the first year or so. The lenders had been used to didn't really know what to do, so they'd ask for a little more than they think they could get, whereas we made it pretty clear, don't color outside the box too much, and the most HUD applications are successful. I mean, HUD has a very low turn-down rate in the 232 program. They don't kick too many out. I mean, they may shave the loan amount a little bit, but it's been good. So the lenders caught on fast and they process efficiently. The borrowers, we did see large sophisticated borrowers even back when I first took over, but I think I think the quality of the borrowers has gotten better. HUD has a better reputation now since the delivery is better. And I think you can see in the industry that there's more of a migration to real professional ownership. I think it's still kind of a fragmented industry, both for assisted living and skilled, but there aren't the super large owners own what, 20% or 25%, if that. But I think you see fewer pure mom and pops and more of the 10, 12 facility owner operator. So and your economies of scale, they probably tail off around what, 20 or 30 facilities. But
well, that's a subject of debate, which
yeah,
we won't go into.
Right. But anyway, it's above mom and pop. It's above one or two.
What's always surprised me is, and I'm going to ask you about whether this conversation ever would come up during your years at HUD. HUD, there's a lot of the A7 refinancing of existing HUD debt, and I would think institutionally, from a government perspective, there'd be more interest in providing new debt, not just helping borrowers save money, other than it makes the loan better because the debt service is less. Has there ever been any discussion to kind of try to get more towards the construction financing, new financing, as opposed to refinancing?
To give you a straight answer, not so much. Okay.
I want a straight answer.
Yeah, no. They in HUD, we felt that we were doing ourselves good by having the lower rate, and the demand from the lenders was there, the demand from the borrowers was there. So, sometimes people at HUD say, well, HUD's trying to do this or trying to do that, and a lot of times HUD is just trying to be responsive to what's being presented to them, and also to stay out of trouble. So I think there's certainly pressure from Congress for HUD not to be in areas where the private sector can supply capital, and I think the 232 program is one area where you certainly can see that it's a good place for the government to be in, because a lot of the risk in especially skilled nursing is in reimbursement risk. So, and the private sector very appropriately puts a risk premium on lending to that industry. Whereas if the government insures the mortgages, the government's basically insuring against their own risk. So it makes sense. I always say that if I had Grover Norquist here, I could convince him that this was a great program for the federal government to be doing.
Well, let's talk about government or quasi-government programs. There's been a lot of talk about Fannie Mae, Freddie Mac, possibly being legislated out of business. You know, no one really has taken that step yet. Politicians are reluctant to go that far right now. But I assume, regardless of what happens with Fannie and Freddie, HUD-Lien is going to be safe for a while, right? I mean, is there any?
That's what I believe, because of what I just told you.
It's
It's very profitable for the government, and so much of the risk, the risk is the government reimbursement risk, and also the clients, the people in nursing homes and assisted living facilities, for that matter, are people who need affordable residential care. What is 80%, 80 to 85% of people in nursing homes are on Medicaid or could be, and the number's high for assisted too. It's not people with a lot of income. So it's a very sensible place for the FHA to be involved.
Well, I know your customers certainly don't want to see it go away, because it's great non-recourse long-term debt, so at great rates. So even good rates today, even though people are complaining about the recent spike,
and indirectly it saves money for the government, because to the extent that your cost of capital is lower, your charges you have to put through to either Medicaid or Medicaid are lower. So
well, but it also, I mean, the HUD program right now, at least on the HUD-Lien, makes money for the government.
Yes,
it's a profit center.
It's the default losses have been around 10 basis points on the total portfolio for years now. It hasn't spiked up any recently, and so the mortgage insurance premiums are 55 basis points. So you got money right there. It doesn't cost that much to run the program.
Yeah, no, it's a good program.
And it's I think it's almost 20 billion now in mortgages outstanding. So that's a sizable piece of capital.
Presumably growing. Well, hope you continue to grow, and welcome back to the private sector.
Thanks very much.
All right, nice to
Great to be here.
Yeah.